All right, what's up, guys? Back with another Bitcoin episode. So let's just jump straight into the charts today. So as you can see, Bitcoin found support on the 200 moving average on the 4-hour time frame. Measuring out some targets, let's take a 3-point trend-based fib extension. So the key level for the bulls to break is the one-to-one extension around $71,000. If the bulls break above $70,000 to $71,000 to the upside, Bitcoin can finally arrive at the $80,000 price target we have been talking about for the past few weeks. If the bulls fail to push Bitcoin past $71,000, that's going to open the possibility for Bitcoin to retest the prior week's lows set around the lower $60,000 region. Regardless of the short term, Bitcoin is going to hit 80K and then 175K sometime in the bull market. It's not a matter of if Bitcoin hits 80K, it's a matter of when. Now, one interesting thing I came across this week was someone comparing the total 3 chart from 2020 to today. Basically, the total 3 chart represents the total cryptocurrency market cap without Bitcoin and Ethereum. So basically, just altcoins. Today, Total 3 is tagging the same 61.8% Fibonacci retracement Total 3 tagged in 2020. And obviously, as you can see on screen, Total 3 ended up crashing roughly 66%. Now, I don't believe this major crash is going to happen for 3 reasons. The first reason is that in 2020, there was a bearish monthly shooting star pattern printed off the 61.8% Fibonacci retracement. Fast forward to today, there is no bearish monthly shooting star being printed. The second reason is that in 2020, the altcoin market was barely above its bull market support bands. Fast forward to today, with 5 days until the monthly close, the altcoin market is sitting pretty at nearly $750 billion, which is $200 billion above its bull market support bands. The third reason is that if you have been following this channel for a while, you will know that bowl-shaped structures are cumulative in nature and dome-shaped structures are distributive in nature. The altcoin market, Total 3, is printing a bowl-shaped structure on the monthly time frame. So as we talked about before, I definitely think crypto is entering the next phase in the bull market where Bitcoin starts handing the reins over to altcoins. Now, could there be a 30 to 40% cryptocurrency correction coming? A correction is possible. I am monitoring that scenario in the short term, but I don't believe a 60 to 70% devastating wipeout is going to unfold anytime soon. I'm more in favor of everything ranging from stocks, cryptocurrencies, bonds, and precious metals continuing to melt upwards. Heck, even commodities like oil. Last week, we talked about oil reclaiming its 200 weekly moving average as well as the bull market support band. As stated before, I believe everything will continue to climb the wall of worry over the next few years. Okay, so moving into some regression, just a quick recap. The green region represents Bitcoin's undervaluation, the red region represents Bitcoin's overvaluation, and the blue line represents Bitcoin's fair value. Bitcoin's overvalued region this week spans between $66,937.56 to $129,618.49. And the reason these bands are so important is that the regression bands have caught every Bitcoin bull market top and bear market bottom. As you can see, Bitcoin today at $70,000 is overvalued. And this is where things get both complicated and interesting, because cryptocurrency back in 2023 was neither popular nor in favor. Buying Bitcoin today in 2024 carries significantly more risk than buying Bitcoin in 2023, regardless of the Bitcoin ETF. If you were buying cryptocurrencies in 2023, you were buying crypto when it was undervalued or fairly valued. If you are buying cryptocurrencies today, you are buying crypto when it is overvalued. So it's very difficult for me to say whether Bitcoin is a buy here today because you are exposing yourself to significant downside risk should a correction occur. It all comes down to your risk tolerance. If your risk tolerance is high, if you can mentally withstand a significant correction, I do believe Bitcoin will, one way or another, tag the upper bound of the red region, which will one day intersect with the 1.618 Fibonacci retracement at my bull market price target at $175,000. Another thing that is interesting is that tether dominance is at two golden pockets and at a previous support level from 2021 and 2022, as denoted by the small orange circles. Just a quick recap: when tether dominance goes down, Bitcoin goes up, and vice versa. These golden windows from the 1.618 to 1.786 Fibonacci levels basically serve as a liquidity point for a potential reversal. If tether does reverse to the upside, that will bring downwards pressure on both Bitcoin and the rest of the cryptocurrency market. It's not just tether dominance that is in a golden window. Ethereum, as we spoke about a few days ago, is in a golden window. Last week, we talked about Coinbase being in a golden window. And now today, even the total cryptocurrency market cap is in a golden window. I still stand by what I said in the Ethereum episode, where I said the biggest mistake is being too protective and being too cautious. If a cryptocurrency correction does occur, it will be an amazing buy the dip opportunity. Like I said, I don't believe a significant wipeout is about to occur. The biggest question is, what is going to happen in the short term? I wish I had a crystal ball, but I don't. But as stated in the beginning of the video, the key level for the bulls to break to the upside is $71,000. If the bulls can't reclaim $71,000, then that is going to open the doors for a short-term cryptocurrency correction. Okay, so that's my analysis on Bitcoin for this week. I hope you guys enjoyed the video, and I'll see you guys in the next one. Take care.